Alright everybody, today I have a very simple and brief video for you. And today I'm going to be going over the basics of market structure. I'm going to go over trends, highs and lows, break of structure, market structure shift, and how to identify a valid break or an invalid one. So, we're going to start off by explaining trends. So get out your pens and write this down. So, an uptrend, all it is when price is bullish and making higher highs and higher lows, like that. So you can see this high was higher than the previous one, this high was higher than the previous one, this low was higher than the previous one, this low was higher than the previous one, higher highs, higher lows. That's an uptrend. Downtrend is the opposite. Lower lows, or lower highs and lower lows. That is the downtrend. This low was lower than this one, which was lower than this one. This high was lower than this one, which was lower than this one. So, progressively making lower lows and lower highs is a downtrend. Higher highs and higher lows is an uptrend. Now, talking about what a high and low is, a high is just a temporary peak in price, and a low is a temporary dip in price. So, entering a real life example of this would be right here. Sorry, let me hide these colored boxes so I don't confuse you guys. So, I'm going to grab out my brush in red, and I'm going to start marking out lows and highs. So the price dipped right here. I'm going to start right here. This is a low, went all the way up to this high, temporary peak, and then it pulled back a little bit. A low, a high, a low, a high, low, high, low, high. So obviously this is an uptrend. Price is going up, price is bullish. However, in an opposite scenario, right here, we see high, lower low, lower high, lower low. That's a downtrend. But how you can algorithmically identify highs and lows is just looking at the candles themselves. And by the way, the blue candles are the bullish ones, the green ones, and the gray ones are the red bearish ones. So you just look for where the bearish candles end, and the very bottom, even though this is a bullish candle, it went below this bearish one. So right here would have been the low, and this is the temporary peak, the high. So high to low to, technically this is a high because it went up and then down. Any move up and then down is a high, and then any move down and up is a low. That could literally just be two candles. So this would be a high, and then the move down and up, this would be the low, and then a high. If we're just speaking generally, you can just mark out this high, this low, this high. You can ignore all the baby candles that are fluctuating as long as you look at the general structure of price. High, low, high. This is the low, it went down here, and then it peaked here. So you should understand the concept. I'm just here to inform, but if this doesn't resonate with you, then you can easily search this on your own. There are so many explanations online. I'm sure you guys can learn this and truly have the information resonate with you. So, after you've learned about trends, uptrends and downtrends, and highs and lows, we're going to learn about two concepts. Number one, break of structure, BOS, and then number two, market structure shift, MSS. So, a break of structure literally is just the sweeping of highs and lows. So, this right here, break of structure because it broke above the high. This right here, break of structure because it broke above the high. However, market structure shift is when price, not only does it break structure, but it turns from an uptrend to a downtrend. So here you could see we're making higher highs and higher lows. However, once this low swept this one, that is when we turned into a downtrend. So right here was the market structure shift. This is not a market structure shift, that's a break of structure because it swept highs, but still we were already in an uptrend. However, when the lows are swept in an uptrend, that is a market structure shift. And when the highs are broken in a downtrend, here we were in a downtrend and this high was swept, that is a market structure shift again, but to the upside. So this is the bearish scenario where price turns downwards, and this is the bullish one where price becomes bullish. So now that you know what a market structure shift and a break of structure is, let me teach you what a false market structure shift looks like. So I'm going to go up here and show you an uptrend. We're in an uptrend, and let's say that's the high, and then price goes there. Oh, sorry, let me redo that. So, is this a valid market structure shift right here? Because we were in an uptrend, and then market decided to break this low and now start a downtrend. Is this actually a downtrend? Is this actually a market structure shift? The actual answer is no, because in order for market to sweep to the downside and market structure shift bearishly, this previous high would have had to have swept this one. So in order for this market structure to be valid, the shift, you would have to have swept this previous high and then break below the low. Otherwise, this low would have had to sweep this one, because this isn't a valid high. So that means this would be the most recent valid high. Let me move this like upwards a little bit so it's not too close and confusing you. So in order for this to have been a valid market structure shift, it would have had to gone below this low and not this one, because this isn't a valid high. So that means this low couldn't have been swept. It doesn't matter if it's swept. It's still technically an uptrend. So in order for a market structure shift to happen, this high would have had to sweep the previous one and then break below this low. Otherwise, it has to break below this low. So the only thing this means is that if you're in an uptrend, in order for the high to be valid, it had to have swept the previous one. And in a downtrend, in order for the low to be valid, this would not have been a valid market structure shift because it did not sweep this previous low. So in a downtrend, you're looking to sweep the lows. In an uptrend, you're looking to sweep the highs before the lows. So this one, not a valid market structure shift right here. That's not valid because this high was not swept by this, or this low was not swept by this one. This one would have had to come down here, then broke that low. So now, that means in order for this to be a market structure shift, it would have to break that high all the way up there. So, you might have to watch that. Sorry, my storage ran out. But yeah, I was just talking about how some market structure shifts can be valid and other ones aren't. But now, let me teach you about the other kind of invalid market structure shift or break of structure. So, right here, you can see that we are in an uptrend. I'm going to highlight the part that I'm talking about so you guys don't get confused. So, right here, I'm going to get my brush out, and I'm going to show you, we have a low here, and a high there, and then a low there, a high, a higher low, higher high, and it goes all the way down there. However, this isn't a valid market structure shift or break of structure right here. And the reason for that being is because even though we did sweep this high, the body of the candle didn't close. Well, technically it did, but just pretend that it didn't so you can understand the argument I'm making. If the body of the candle doesn't sweep, and when I say body, I'm talking about the thick colored part, not the wick. If only the wick wicked this low out, that's not a valid market structure shift or valid break of structure. So this isn't valid. And again, pretend that these thick parts of the candle didn't actually go below, because technically it did, technically it is. But if these didn't go below it, if it was just the wick that went below it, then it would not count. In order for a valid break of structure, the thick part of the candle, see how over here the body actually went above the high? That's a valid break of structure to the upside. However, this is actually a good example right here. You see a high right here and a higher high right here. However, technically, this wick, you draw it from the wick to the body of the candle. So the previous high, you can draw it from the wick. The wick does count. However, the newer high, the body of the candle itself didn't actually close above this high, so it isn't a valid break of structure to the upside. Price did go higher up, without a doubt. It definitely did. However, you wouldn't label this as a break of structure. So, I've taught you 5 things today. I've taught you uptrends and downtrends, highs and lows, break of structure, market structure shift, and what validates or invalidates these breaks of structure or market structure shifts. So, watch this video again if you have to, but this was just a simple explanation of the basics of structure that you need to understand before you move forth.